Morning, Steve Free in Chicago with the morning grain comments. Well, we've got prices higher overnight. The July beans up 14 cents at around 15.38. November's up 11 around 13.56. We got corn, July corn up at 6.91, while December's 5.68. And the wheats have turned higher after a lower trade overnight. Chicago, July wheat 7.21, Kansas City 6.93, and Minneapolis at 7.76. Mixed trade in the stock market overnight. Dollar's higher, crude's higher, and gold's a little bit lower. Tuesday is usually a day about numbers, and so corn planting was 46% done versus 17 last week, and 36 average. Illinois is 54 done, Iowa 69. Bean planting is 24% done versus 8 last week, 21 average. Illinois is 41, Arkansas 38, Iowa 43. Soft wheat, spring wheat planting is 49% done versus 28 last week, 27 average. North Dakota's 42 versus 14 average. And the winter wheat crop ratings were dropped to 48% good to excellent versus 49 last week and 55 last year. Again, soft wheat conditions are still above average. We also note that as far as weather is concerned, we're in a 2-week pattern of normal to below temps and normal rainfall across much of the Midwest. The next 7 days, heaviest rains will be in Missouri, the Ohio River Valley, and Delta. Long range, we're expecting that to show some kind of pattern where we could see a couple of weeks of weather like this, and then 10 days of hot, dry weather, especially west of Mississippi. We don't see a persistent ridge moving into the Midwest until maybe later this summer. So we'll see how conditions move along in that type of forecast for places like Nebraska, Iowa, the Dakotas, and Minnesota, and the Canada Southern Prairies. We do note that most people are looking at Brazil corn crop 5 to 12 million tons below the USDA's last estimate. That could add corn export demand, especially in the 21-22 season for U.S. Also note that U.S. wheat prices are a premium, maybe as much as $40 to $50 over Europe and the Black Sea. The other thing I think that we're looking at is that domestically, crushers are bidding up for corn and soybeans. Good ethanol demand, or at least improved ethanol demand, and good soybean crush margins are supportive. We've already talked about China taking all their corn that's on the books. That will add 160 million bushels to this year's export numbers. We're also talking about big soybean oil demand over the next year or so that'll add to the U.S. soybean crush. So we need a perfect crop, and we also need to watch USDA's May 12th report to see what they do with this year's supply and demand numbers and the first guess that they have for next year's 21-22 supply and demand. Path of least resistance seems to be up. We'll have to kind of watch weather. We'll have to watch the old crop demand, and we'll have to be watching some of the outside markets to see how the economies are going and how they're growing, plus competition for U.S. exports. As always, these are my thoughts, not those of ADM Investor Services. Have a safe and profitable trading day. Remember, always treat people like you yourself would like to be treated.